Gentlemen, my name is Maltsev and I am a general partner at 3x Capital. Today we will present an on-chain research and also we will present Ethena. Our investment analyst staff prepared a report in order to showcase the opportunity on Ethena today. Also, I would like to highlight that we do not provide any financial advice, so please do your own research and make your own investment decisions. So I will be sharing my screen right now. Please let me know if you hear me well. You can write a comment in chat. Just a second. Yeah, I think no one is writing to me, so probably the connection is good. So right now you should see my screen. Here you can see a Bitcoin realized capitalization. So we achieved the all-time high recently with a current realized capitalization around $540 billion. We'll move forward. The Bitcoin realized capitalization hodl waves, which means that around 44% of all coins are held by wealth network. So we can see here that this amount is growing aggressively during the past couple of months. So more Bitcoins right now are held by new players acquired during the couple of past months called short-term holders who just recently bought Bitcoin. So we will see more information later about that. Also, the analyzed realized volatility is growing. Just in October previous year, we achieved the volatility bottom, which was less than 40%. So right now, finally the volatility is growing, and there are more opportunities to benefit from it for short-term holders and of course for long-term holders who were buying BTC much earlier and with better price than previously. Also, we can see that we still didn't achieve the realized volatility during the uptrend cycles. So there is still a huge potential for growth, and some investment advisors in the space, they are suggesting that it's just a half of the bull cycle. Probably there will be more opportunities. Bitcoin long-term and short-term holders. So to divide them into two categories, we need to understand that short-term holders are people or investors who just bought BTC during the past 2 months, and long-term holders are people who are holding Bitcoin for at least 6 months. So we can see that the red line, which means the short-term holder supply, is growing significantly starting from January this year. So after the Bitcoin spot ETF was approved. And also we can see that the long-term holder supply has a significant decline of 900,000 Bitcoins. Actually, I think we understand that long-term holders are selling right now and short-term holders are buying Bitcoin quite aggressively. Also, what is interesting that the third part from 900,000 Bitcoins belongs to Grayscale BTC fund. So they have sold around 286,000 Bitcoins during the past few months. And long-term holder supply was recently in the peak with around 15 million Bitcoins that were held by long-term holders. And also we can see that short-term holder supply is growing, but it actually didn't achieve the peak that was achieved in the end of 2020. So we still have a lot of potential for acquiring Bitcoins, and the amount that was acquired from exchanges is extremely low. So it's around 121,000 Bitcoins from exchanges only. Bitcoin long-term and short-term holder supply ratio. So we can see that with this yellow line, it is going significantly down. So there is a big transition where long-term holders are taking profit and short-term holders are acquiring new positions. Also, we can see the unspent realized price distribution between two cohorts. So right now we can see that, as we discussed before, the majority was bought by short-term holders. You can see in the red, and long-term holders are not buying a lot right now. So they are actually realizing profits. Also, what is interesting that around 9.5% of Bitcoin total supply, that is 1.87 million BTC, have been acquired above 60,000 price per BTC. Also, this graph represents the entity-adjusted liveness. There are two regimes, spending regime and hodling regime. So right now we are experiencing the start of the spending regime. The previous cycle had a similar regime in the end of 2020 and the beginning of 2021 here. So it looks like the half of the cycle is already done, and we are looking forward to see what will be next. Also, Bitcoin short-term holder realized profit. We can see that short-term holders are also experiencing significant profits during the past couple of months. I do not think that it can continue for a long period without any sustainable correction that will lead to continuous growth. But as of now, we can see that the Bitcoin went down to the support level of around, I can say, 64,000 per BTC. And it is just today started to recover from this number. So let's see what will happen next. And also this is very interesting metric called entity adjusted short-term holder realized loss. We can see that during the past year, especially the end of the year, the realized loss reached quite significant numbers. At some point, it was more than 114 million for short-term holders. And we see that this metric is increasing with rec wave of price appreciation. So also we can see during the past year similar record number of the realized loss with $87 million and $112 million. Short-term holder sell side risk ratio. Also very interesting here to understand that the blue line is high value realization and the red line is low value realization. The yellow one here is the sell side risk ratio. So recently it went up to the high value realization, and right now went down to the middle between those two lines. So we can see that during the past cycles, large short-term holders profits plus realization around major market events. So it's something that is happening right now. So maybe we will spend some time and accumulate more assets during the next couple of weeks before Bitcoin halving, and before the significant growth of BTC, similar to what has happened during the previous cycles, based on this sell side risk ratio, specifically for short-term holders. But also very interesting to follow long-term holders, especially realized profit and loss ratio. So we achieved the euphoria zone for long-term holders. Similar situations were in 2011, 2013 and 14, then 2017, and then 2020. So we achieved this significant mark where long-term holders are realizing significant profits, so-called euphoria zone for long-term holders. Entity-adjusted long-term holder realized loss. Also, we can see that it is going down, declining for long-term holders, and right now the numbers of entity-adjusted long-term holders realized loss are very, very low. So the current long-term holder realized loss should be around $3.5 thousand per Bitcoin. So probably we will not see this number soon. That's why the majority of long-term holders, it's obvious, having significant profits right now. And regarding long-term holder sell-side risk ratio, that has recently started to climbing up to similar numbers that we had in 2013, then 2017. So we were between two lines, the red and the blue one. The blue one is low value realization for long-term holders, and the blue one is high value realization. So we still didn't achieve the peak. The previous, for instance, peak was achieved in the end of 2020, actually the beginning of 2021. So based on this metric, we also still have a lot of potential for growth. So that's it from my side. I hope it was interesting, and I will pass the floor to Steph, who will introduce his research on Ethena. Steph, the stage is yours.
Hey, hi everyone, GM. Can is my piece showing even? Okay, there you go. Hi everyone. So GM again. Today we will talk about Ethena and their 800 million TGE that happened this Monday, April 2. We'll also discuss their season 2 SATS campaign and farming opportunities that we can test. In this research article, I also provided some rough estimates in farming Ethena season 2. So by the end of this session, we can have an assessment, our own personal assessment, whether to farm the season 2 of Ethena or not? Okay. So before we start, let's have a refresher on what Ethena is. Ethena is a synthetic dollar protocol built on Ethereum, and it claims to offer users a decentralized stablecoin which is non-fiat backed, it is yield generating, and it is non-dependent on traditional finance yields like treasury bills. So how is USDE created and how is it stable? The mechanics of minting USDE starts with the users depositing their asset in the platform. Then on the back end, Ethena does steps number 2 and 3 through the off-exchange settlement providers and locating the most efficient venue to open the short ETH position. Now, how is USDE stable? The stability of the Ethena stablecoin comes from the delta neutral hedge, where for $1 of ETH longs on the other side, that Ethena has a collateral, there is a corresponding $1 of each short opened on centralized exchanges and decentralized exchanges. This moves us to the next question on where the yield is coming from. With the delta neutral hedging that Ethena is doing, they are actually earning from it, and users who would stake their USDE would be given a portion of these rewards. So going here in this diagram, having a spot ETH position in the left and a short ETH position in the right, it would give you no exposure to the volatility of Ethereum's value. However, the ETH spot collateral earns on an average of 4.5% through the stake ETH, and then on the other side, the derivative short positions earns yield through the funding rates. Okay, now let's move on and have a recap of Athena's season 1 shards campaign. So Athena's season 1 started on February 19, with the duration being 3 months, or when USDE reaches a total market cap of 1 billion. They were able to achieve and reach the 1 billion market cap in only 6 weeks. And then moving on to their token generation event this Monday. In the 6 weeks campaign, a total of 122,000 users have accumulated a total of 360 billion shards that distributed 750 million worth of ENA tokens. ENA opened trading at $0.5 with a market capitalization of 1.12 billion and an FDV of 8.16 billion. On ENA's tokenomics investing, 5% 5% of ENA tokens were unlocked for the qualified shards farmers, and then 4.5% were sent to market makers to facilitate the trading. So ENA's utility is it is a governance token that will be used to vote on matters such as the general risk management frameworks, USDE backing composition, exchange exposure, custodian exposure, and uh, this governance proposals. Now, let's move on to the Athena's Season 2, the SATS campaign. So, in simple terms, the SATS campaign is just a rebranding of its previous Shards campaign. And what it really represents is the introduction of BTC as a backing asset. With the introduction of BTC as a backing asset, this would scale USDE, and it would add an additional 25 billion of open interest to the delta hedging that Ethena is doing, which is a 2.5 times increase on the current size of the ETH perpetual futures. Season 2 also unveiled Ethena's new partnerships. So first is with the money market protocols in Ethereum, MakerDAO and Morpho, where 1 week before the TGE, both Maker and Morpho already launched their USDE pools, and 100 with a allocation of 100 million DAI. This was pretty filled up immediately, and for season 2, they would be increasing the cap by, I think, another 100 million. And then uh, season 2 also unveils Ethena scaling out to the Ethereum layer 2s, with them integrating with the Mantle ecosystem. Prior to the launch in Mantle, they already indicated their partnership with the integration with Ethena through the Mantle Reward Station campaign, where users can lock their Mantle tokens to farm Ethena shards. So Ethena shards, which is the season 1 campaign. I would not go over into details, but here are the Mantle protocols where users can farm sats. So we can farm in Merchant Mo, which is a decentralized exchange, through providing liquidity on their LP pools. We can also do in providing collateral or through the looping hooks on Init Capital. And then we can also use USDE as collateral on IntentX, which is a derivatives exchange. Okay. As mentioned in the intro, I included in this article farming opportunities for season 2, and I also included some computations to assess profitability. And looking back to season 1, here are the shard farming options. Okay, and in the 6 weeks of season 1, users have amassed a total of 360 billion shards, and the Athena Labs allocated 5% of the total supply, which is around 750 million. So this gives us 480 shards per ENA token, and the ENA price on at open in Monday, the price open at zero point 0.5. This gives us a price per shard of 0.0011. With this data, we can simulate the rewards if we did a $1,000 position for USDE. So out of all the earning options, it was the LP position and YT USDE position in Pendle Finance that provided the highest return to capital, with 112% return in the LP and then 238% return through having a YT position. So YT is the yield token. So just a little bit of disclaimer for the computation. Uh, Yields from the underlying strategies were not considered, so we can focus on the shards farming itself and the conversion of the shards to ENA tokens. An assumption I did is the farming of shards was done since day one. There were no compounding computations made, and then referral bonuses were also not considered. Moving on to season 2, Ethena opened more options for earning sats this time around. So you see here earning mechanics from the money market protocols of MakerDAO and Morpho. Uh, Pendle is still here, but now as a DApp on Mantle. And what's good to note is for this season, Mantle, Pendle, and Ethena incorporated eigenlayer points in the Pendle strategy. To simulate earnings for season 2, we need to make some assumptions also. So for this one, I made a conservative assumption. As mentioned earlier, 5 billion is the target TVL for USDE and at the time of writing, USDE's TVL is at 1.5 billion. Therefore, 3.5 billion is the amount to farm to reach the target TVL. If ever the 5 billion target would not be hit, the maximum duration for the campaign is 153 days. I also made an assumption here that for that the average sats that a $1 can earn is at 15 sats, despite the earning options to be at 20 times sats per day. And the last assumption I made is the token allocation. for this season, I presume that Ethena Labs would be allocating 5% of the total supply again, which will put it at 750 million to be farmed. So using this assumption, we would be provided with the following earning potentials per sets earning options. So out of the earning options, it's still on Pendle Finance, whereby holding YTUSDE yields the highest rewards, giving our $1,000 position an ROI of 159%. And then going on the safest route, which is through from providing collateral on Maker, it would be yielding 11% for our $1,000 position. And then putting out the disclaimers again, computations may not be accurate due to various moving factors. And by the end of the campaign, there might be some assumptions to be found wrong. And then mechanics are also subjected to change. So definitely this will impact the computations. So let's have an assessment. Looking back at season one, the simplest farming strategy of buying and holding USDE provided a return of 23.75%, while the simplest in season 2 through MakerDAO would yield an ROI of 11%. The best farming strategy, on the other hand, for both season 1 and season 2 was on Pendle through the yield token USDE. And on season 1, it yielded 237% for the whole season 1. And then for season 2, I'm assuming for a return of 159%. So if we compare the two seasons, we can clearly see that being early was greatly incentivized by Ethena, as the Shards campaign was clearly more profitable in farming uh, in season 1 compared with the simulation for the season 2 SATS campaign. All right, so we've finished discussing the opportunities for Ethena, and for this project, it is very important that we also discuss the risk associated with the stablecoin and the mechanism that makes it stable as well. The first and most important risk to know is the DPEG risk. So the DPEG risks are highly probable in two scenarios. So I separated into two. First is the funding rates, wherein during negative funding rates, and then the second one is the during liquidations, when and if STE, which is used for collateral, depegs with the value of the underlying asset E. So for the negative funding rates, it is the scenario wherein there is much more short positions than longs in the market. Therefore, short traders pay the funding rates to the longs. So in this scenario, there would be no yield. No yield would be expected from the short side of the trade, and then all yields would be carried out by the stake ETH. And the worst thing that can happen is that the negative yield from the short side of the basis trade would be much higher than the yield stake ETH is providing. So Ethena Labs claims to have a solution for this risk through their insurance fund, which is currently, I think it's at 25 million, and it is accumulating value over time. And then through their anti-reflexivity design for Ethena, and then they are also saying that the historical funding data shows only a maximum of 13 days of negative funding, considering the ETH yields in the equation for the past cycles. The other two risks are the exchange failure risks, where derivatives position are opened on centralized exchanges and decentralized exchanges. So protocol would need to manage the consequences if ever one or more exchanges shut down, like what happened to FTX. And then last is the collateral risk, wherein a failure of one LST, of one liquid staking token for ETH, will also create a big implication on the mechanics of Ethena. So in summary, Ethena Season 2 is a bit less lucrative than than the shards campaign, but still it provides great opportunities to farmers who would like to participate, have an exposure to Ethena. And the passive earnings from the trading fees in the decentralized exchange liquidity pools and through the borrowing fees in money market protocols, with an added incentives from the SATS campaign, when these sats would be converted to ENA tokens by the end of campaign, it would still outperform most of the DeFi returns that we could see in the market. And that's it for my side.
Thank you, Steph. It was super interesting to learn more from you. Actually, you are the person who introduced Ethena to me. I decided not to invest there. I think in January you sent to us the guide with the explanation of Ethena and the opportunity there.
Yes.
Also, I'm curious to know, and also, guys, please feel free to write your questions in the chats in Twitter and LinkedIn, YouTube. We will try to cover everything today. So I'm curious to know. You mentioned around 20% returns in quite short period of time. So the this season one, how long it
Yes.
was, and how you started to work with Ethena.
Well, for season one, it only lasted for 6 weeks, and actually I tried it. However, I scaled out of my USDE positions by 3 weeks before the TGE, and then it was announced by Ethena that users who scaled out in their USD positions will not be qualified for the TGE. So I
Mm-hmm.
was not qualified for the season one campaign.
Mm-hmm.
That's why for season two, I would be testing the yield token in Pendle Finance.
Mm-hmm. Yeah, and will participants generate additional yield? You mentioned Egan layer points, but also maybe something from Pendle Finance as well.
Yes, the eigenlayer points, however, would be available for those who would farm sats through Pendle Finance only.
Mm-hmm.
The other dApps would be earning only sats and, of course, the yield fees from the LP, from the trading fees from the LPs, and then the borrowing fees for the money market protocols.
Mm-hmm. Understood. And even considering so many risks and so many things that Ethena depends on, like third-party risks, you mentioned LSDs. Yeah, I think it's quite risky, and 25 million will not be enough to cover the losses if something could happen with LSDs. So, do you think it's still reasonable to participate in season two with potential 11% returns in months and a half?
For me personally, I think it's still a good opportunity to farm, especially for those yield farmers out there, as we we are given an opportunity to have an earnings on top of the yield that we earn from the money markets and the yield farming protocols. But personally, I think the strategy that I would be doing here on Ethena is when the markets turn. So as we go onto the bearish side, I would completely scale out of my Ethena position. So I won't have an exposure to the possible downside risk that I mentioned a while ago for Ethena.
Mm-hmm. Understood. Yeah, actually, I had a very negative experience with UST, which is also was an algorithmic stablecoin. Of course, Ethena is different and it has the unique model that you explained, but I experienced significant losses, around 50% of my USD position.
Same.
Yeah, I wasn't able to sell it. So I definitely suggest everyone to do your own research, especially the risks that Steph mentioned. It's really important to understand and build your risk management strategy accordingly, because some people, they put too much money into one investment, and unfortunately in the end it can lead to significant losses to the whole portfolio, and it will be really complicated to recover. So it was good for me that I used several stable coins, and USD was just one of them. But still, I had significant losses due to that situation with Luna crash. Also, maybe we can have some questions from the audience. I do not see them here, but I can check on our LinkedIn and Twitter. Just a second. We have more than 35 people right now with us. Yeah, I see that Luke is with us. Okay. We do not have any questions as far as I see. It was very interesting to listen to you, Steph. I'm looking forward to our next market research meeting with you or with Slava. And thank you guys for joining. Wish you a wonderful rest of the day.
Thank you, everyone.